let's go with one of the main speakers today. Are you ready? David Aranzabal. He's one of the main ones. He's the CEO of Hedge for a living, he's a trader, entrepreneur, international speaker, and works with the main media in the sector. He's got over 100 live trading sessions. He's done over 1,000 free training webinars. And he's the organizer of the Trading Week, the Forex Day, and also the Trading Accelerator. He's very well known as one of the better well-known people in Forex. He's also an international speaker in cities such as London, Johannesburg, Miami, Moscow. He has carried out conferences and live trading sessions with the top guys, with one of the main, or some of the main international traders. We saw him with Boris Sol, we saw there's Rob Booker. He'll be with us afterwards. Lex Van Dam, Ashraf Laidi. So, always friend row. He's been the chief of technical analysis of two big international brokers, helping them expanding here in Spain, also in Latin America. And his intervention, today's intervention, will start and sponsored by FX for a Living. With, well, as novelties, he's going to offer hedge fund professional techniques. Excuse me. Well, for two different things. First thing, yeah, so you can hear. Well, I have a problem, and because I was looking too late. For a place where Rob Booker could eat some ham. And great. You know, I like to move a lot, but I'm going to have to be here, around here. Well, let's take a look at professional hedge fund techniques and how they can be implemented in your trading. So the techniques that are being used, that institutional traders are using today. And we are going to see how a trader like you from home is going to be able to implement them to have a better performance in your daily trading. So let's take a look at this progression from institutional to retail. What's institutional? Well, institutional is everything from the trading management that goes through big accounts for individuals or investment banking, hedge funds, and that's what we're going to be seeing today. So what's the secret to be sure that we can implement these techniques in an easy way and do it ourselves? What do you think? What can you see here? Which are the... Well, in this slide, what can you see in this slide? Something that can accelerate our trading or have a trade that looks more like a hedge fund. It's a group of what? It's a group of different strategies that, well, with the or just with the pencils, and that was hard. So I get it. That I understand that you weren't raising your hands, and. Well, first thing, let's take a look at strategies. First thing, where do I get strategy from? And then I have several. You know, it's hard to have, it's hard enough doing it one strategy. If I have 5 or 6, I end up making a mess out of it. So let's take a look at how many tools we can use and take a look at those ratios. So my trading is better than just by using one strategy. Well, this is our objective here. The performance we expect from our trading is always going to be the closest possible to this blue line, constant. Or what do you prefer, to have a line that goes way well, even twice as high, but it goes up and down a lot, that it's even negative, well, in range, but then, you know, with it being scary, or even if you make a bit less money, it's something that goes that's a bit more constant. So more rentability, but being afraid of this line that makes us less money, less profit ready, but it's constant, and we can foresee a bit better what can be done. If you think, if you want it to be stronger, raise your hand, please. Okay, you helped me before. All right. So you like it spicy, okay? And who prefers a movement that's more constant and defined and being able to sleep? Don't fall asleep now in my session, but who wants to sleep tonight? Well, most people want that, want it to be safer. And we're going to try to increase our long-term performance, even above some references that I always use in analysis, such as the S&P or the IBEX 35 here in Spain, but especially S&P. So orange would be the performance of S&P 500 from 2013, 2014. However, in 2015 was more in, well, the performance was more in range, both for S&P and the IBEX. And what do you prefer, peaks and peaks and peaks? It looks a lot like the previous question, so you don't need to raise your hand. What do you prefer? Foreseeable movement? You know, having the balance at the end of the week or at the end of the month being more foreseeable. Well, that's what we are going to try to do today, blending it with ratios. Blue, that's what we do, our hedge fund system. And orange, that's the S&P. That's been great for several years. Right now, it's a bit in range, but of course there are benefits in the performance of S&P, just like IBEX 35. You know that it's not at its peak now, but we've had some bull years, but as we can see lots of movements, you know, bullish and bearish movements. And we are talking about the drawdown. We're going to talk about that a lot today. That's the file we could have from a hedge fund. When someone wants to invest in a hedge fund, you want to take a look at the stats or the risk you have when you buy that hedge fund. And what do people normally look at? So, the performance, the profitability, that's what you want to know. But very few people ask, how much can I make risking how much? Almost nobody asks that. And that's the key question. Say, okay, if I want to have that profitability, how much can I risk? How many times a year I'm going to have series of losses? So I'm going to skip profitability, and I'm going to go straight to the drag down. And this hedge fund, if I have an isolated strategy, they even lost 20% throughout 1 year. And it is normal. Any trader, you or whoever's managing your money, a friend of yours, you'll see that you've had a series of losses of 1925. I normally place 20%, saying not above 20. Let's not lose more than 20%. However, if we combine the strategies and we use properly, well, we might get to 4.2%. I'm talking about equity here, not the balance. You can take a look at lots of charts, but those are simply that get close, and positive, and they might. But I mean, they might not have a stop or huge stops, and you might have a floating amount there, an equity. That's causing all the losses. And, well, that's not in the report, but it's just as dangerous as the other drawdown. And combining them again. And we're only talking about balance. When you analyze, well, it may be private banking or your bank, be careful, because normally they are only going to talk about the drawdown in the balance. So in closed operations, they are never going to show you, or most of risk analysis won't show you the drawdown you might have in positions that are still open. That equity. So you're going to be able to have a report that, just like the other funds you might have in banks, it's just 0.49. So we want from 1925 to 4.2. And if we see it with the figures from the industry, not the real numbers, financial industry, I mean, it's just 0.49. So how are we going to get this high profitability with little volatility? Well, using multiple strategies, that's the fund of funds, to have an average that's as linear as possible. So it can absorb that drawdown, keeping the profitability. Profitability is going to be added up. So you're going to add up all the profitability you have in all the operations. However, the drawdown, which is what's worrying us, or the possible losses, can be balanced down. So when one strategy is making money and the other one's losing, and the other way around, so the truth at the end is that there are almost no losses, which allows you to have a constant growth that goes in a straight line almost. So we are all talking about the same thing, except you three, we all want it to be constant, not as sketchy. Well, which are the strategies I use? Fine. It's hard to find many good strategies. It's very hard. I mean, it's hard enough to find one good strategy. Normally, when we talk about trading, we only talk about one strategy. That's the one we're using, the one that can be, can be taught by any of the amazing speakers here today. There's almost 30 speakers here today. Or the one you're using, like the one you found investigating and researching. I know that many of you say, I got these such and such and such things, and you create your own strategy. Sometimes it's a bit scary. You get the best thing of each of the speakers, and then the system doesn't work, so be careful. So it's not that easy. You have to test things a lot. Now I'm going to do this course with this guy, and I say, I use your system. Sometimes it happens to me. I'm using your system, and say, show it to me, and it's got nothing to do with my system. So nothing to do with what I'm teaching. So it's normal for everybody to create, for you to create your own strategy. So once we're able to find those strategies, maybe because we've learned it, or someone taught it to us, or we are buying them, how should we use them? What's the correlation? That's the key, really. Because if I use trending strategies at a certain moment when the market's in range, I'm going to be losing money. And no matter how many strategies I use, it's not going to be useful. So I have to blend strategies. Some of them are about trend strategies, swing trading, day trading. So the balance at the end looks as much to the neutral algorithm looks straight. Everything, of course, requires more effort, because you have to be with each of those strategies. So this is not for everybody. So it will depend on how much time you've got, and depend on how I can get those strategies. It's a great challenge, and I think it's something you should have in mind when trying to make your portfolio grow. I'm not talking about investment. I'm talking about speculation. That's why today we're talking about trading. This is not investment. It's speculation. It's very important as well to have small contracts. It's better to have 10, 15 strategies than, risking it all in one strategy. We're going to have that growth line to be as straight as possible. It's martingales is completely forbidden. well, it's just saying, if you're good, you don't need it. But if you're bad, I mean, using martingale, it's going to be awful. But don't use monetary management that come from the game theory. One, well, that's great for them. Pay, I mean, I have nothing to do with the company, but I think it's a strategy. Sorry, a program that given that we can use it for free, you can take a look at it and you're going to like it. It's called Quant Analyzer, but it is in English. That's the only limitation. I haven't got it in Spanish. I mean, if it might be tough if you don't speak English, but that's all. But it's going to allow you to manage your portfolio like a pro. Here we're taking a look at a report in which we get pretty simple statistics that you can find in similar softwares in the cloud, like my FXWorks and things like that. But it provides better analysis, so you can zoom in and take a look at everything you want. And in fact, it takes days to learn the program, to use all of its potential. In here, we've got a beautiful graph. And you see, it's kind of three-dimensional. And you can see, well, if my system is day trading, if I'm closing in 1 minute, 5 minutes, or 60 minutes, or if my system is in swing trading, if it's taking days or weeks to close the trades. And when you blend it all, you mix your whole portfolio, you can see how these strategies generate signals to see that space frame. It's beautiful information, and otherwise it's going to be very hard to see it. And take a look at what times of the day you are making more money. It can show you if that strategy is working or not, if it's working in the European opening or in the American opening or in the Asian session. So you have valuable information. This is a growth chart, and we don't have to take a look at the drawdown, know how much we're making, but how much we're losing. And we won't be able to exit the drawdown until we get new highs. And it's very important as well to analyze it and take a look at the volatility that we're getting. It also allows us to do a Monte Carlo simulation. So here I've got a system that's not working very well. It's been in range for days and days and days and weeks. And I might be able to, I mean, this is always a hypothesis. But I might be able to have a forecast to see how my system works in a certain month. The red area tells us by statistic probability. So it tells you when the price, how the price might be distributed. However, you got this system, which is a trending system. In here, take a look at it. Well, the forecast was quite range, but here it seems that it's going to stay in the trend as well, but with a range that's going to be closer. You don't see the slides very well. I'm going to zoom in a bit. Okay, that's much better. It's Quant Analyzer, that's the name of the program. You can see it here. That one's very important. I said, please don't use the same strategies all the time, because otherwise it's useless. You're only going to get tons of work. I mean, if one strategy makes you work hard, imagine if you have more than one strategy. And if you have to blend them all and see how they work, that's going to be even harder. So don't start blending the same kind of technique. But in here, we're going to see the correlation percentage between all of the different strategies. If they're green, everything's great. the correlation percentages are below 30%. Or you get a matrix done as well. A matrix in which you can, well, it compares all of different strategies. So I can choose if I have a correlation with one strategy or several strategies. As the color gets more and more red, well, when it goes above 70, 80, there's such a high correlation that it might not be worth it to have both of them if we only use one, and it's going to save time. This is another graph in which we can see quite clearly when we're losing money in the different days of the month. It looks a bit like the previous graph we saw. So you cannot see it very well in here because there's only one strategy, but in the previous graph you had tons of them. So in our portfolio, I mean, you have it here and you can provide a certain allocation. You can allocate and create our own hedge fund, so our own investment fund. It's very nice. And maybe we go from being traders to be risk managers. And that's what a hedge fund manager has to do. So the hedge fund manager is not normally placing the orders. They've got a 20 people team or 40 people or 10 people or 20, 40, 60 developers, especially for quantum trading. And you're not doing algorithms, but you are creating simulations with different strategies and using them all at the same time. So they might be using real traders, but it's going to have a certain number of strategies, 10, 15, 20, or 55 strategies. And instead of, you have to analyze how they impact each other and which are the correlations. Am I going fine? Am I not going fine? And well, you go from, you have to check your own, you analyze your own strategies, and when you have several strategies, you are a risk manager. But you are also you're traded by a risk manager. You are creating your own investment fund with, well, your risk management job. So you can take a look at the correlation charts. And Susana, how we're doing? I've got 2 minutes left. Great. So one more thing, I'm going to link this to something we're going to be doing. We're going to do this afternoon. So today at 4 and 5, we're going to have 2 conferences. We are going to rethink a Forex day and have 2 different Forex days on that year, maybe next year. One Forex day is going to be retail like today. So it's for the final, someone who's got a bigger or smaller trading account. The new thing is going to be a Forex day. And given the feedback we get from our sponsors, we know that 25% of the people in Forex day, we've had 1,250 people coming here. So 25% are professionals. And you're looking for something else. You're trying to contact other people. And to see how to make, trying to make trading your full-time job. That's why we're going to have the Trading Day Pro. And the first presentation is going to be at 4 p.m. afterwards. So you're going to zoom in afterwards so you can see it. It's going to be a hedge fund that I am creating right now. And if it's FX, it's the Aranzabal hedge fund. I know that if I pronounce the whole thing, it's a bit weird. But FXTA hedge fund. I have tons of requirements here. First thing is it's not on yet. We are creating it. That's why it's FCA pending, improvement pending. What's the which is the British authority. So there's a disclaimer we have to show, based in London. That's the identification number, and I mean it's also registered here in Spain. And who's managing the fund? Well, it's Space Tech with a billion euro portfolio. You just had a fintech presentation. We had it. So technology startups that are changing the world. Well, this is also a startup. It's a hedge fund startup. So, the management, our manager has offices in different places in Europe, and will be opening in Madrid shortly. So it's quite fine. The UBS is the brokerage, as you can see, all the liquidity providers. We've got all of them. All the big one in Forex, audited by KPMG. So all the orders are going to be executed without a counterpart we never use, or baby book, and the expected profitability is going to be 20 to 30%. So this blue line I showed you earlier, and you all said you would love to have this growth, is the simulation we are making in our hedge fund. This is not backtesting. This result is not backtesting. This result blends certain number of strategies that have been working in the past 4 years. So one of them is my strategy, and some other strategies coming from different traders in different parts of the world are blended. Thanks to the the contents I got from different international events and my networking, I have been able to stay in touch with people who are doing great, really. This is the file from the hedge fund. You see minimum investment is 75,000. That's only for the institutional channel, but we're going to have retail, so don't be afraid. For retail, it's going to be 10,000 euro. And here you can see it's going to be capital management. They are the ones who are managing it. And different information. Broke your capital. And that's our message. And Susana, I'm finishing now, but where are we now? We have already designed it. We've done the consultancy, and we have got the capital ready. We're in the second phase, in which, after creating the hedge fund, that's going to be in the Barclay Hedge Fund Index. We will start with, right now, we're in the second phase. So we're getting our first 5 million through the CTA accounts. So that has a value. It's like as if someone was managing your account, but instead of not knowing who's managing your account, and they can, I'm fed up of having emails saying that this guy broke my account, they were promising such and such thing, or I saw it on a website that he's in Panama, so it's regulated and it's managed by a hedge fund. So we're in that phase, and we want to, we plan to have the fund created by the end of this year. I want to thank many of you here in this conference. You are FX for a living students, and I want to thank you for trusting me. But there are some things that some people have been essential in the creation of this project, and thanks to some of you, we have been able to create this product. So it is very important for me having my old students and former students have participated in the creation of this hedge fund. And why haven't we done this before? Why are we doing it now? Well, this conference, the first part, the training is for all of you. I mean, you can all create your own hedge fund, as I mentioned. But if you want to professionalize your work, we have several opportunities in the Forex Day Pro to help you. First thing, as investors, I mean, you want to invest money, that's easy to say. 75,000 for institutional, but only 10,000 for the retail market. We're going to have a conference in the hedge fund room at 4. What's the room? As you get out of here, there's an elevator. You're gonna have and we go to the second floor. The second floor, that's where we're gonna have a training room for all those of you who want to take a look at it and see how my accounts manager from a hedge fund can grow your capital. And if you want to go from a trader to a professional trader, a step you can do is being an agent. So someone who can distribute the product, protected by the regulator. I've got a friend that does that and that. I'm not being because lots of people are doing it, and it's not perfectly right, and we could help you with it. And third, I'm sure I'm sure that it's eye-catching, but this is a product that was just for our students. But I want to, if you have a good track record, who of you in the room have over 6 months a good track record that you can be shown for over 6 months? 1, 2, 3, 4, 5, 6, 7, 8, 9, about 10 people. So out of all the people here, you're getting some good figures from this training. So for 6 months I've been constant, and I can show my strategies. So I'm starting to be a trader, and why not? Why couldn't I be a professional trader? So for all of you who are curious and want to participate in these talents, we're looking for talents within the people here. And if you're watching the conference online as well, you just have to send us your information to info@fxforliving.com, and we'll get in touch with you. But of course, you have to send us your ratios. This is the last slide, and I say that all this information is coming not from FX for Living. I would be a trader. I'd be an agent, but the truth is that the manager is in the UK. Well, it's been a pleasure. I hope I've been able to help create your own hedge fund.